$69,000 US is Bitcoin's current all-time high. But why was this the top for Bitcoin's price? Let's look at the data and see how we can use this information to try and predict Bitcoin's next cycle peak. Today we're going to be looking at why $69,000 was the previous bull market top for Bitcoin. And where better to start than the price forecast tools we have here on lookintobitcoin.com. And we can see here, if we just zoom in over the past couple cycles, that the $69,000 price peak was a little unexpected, I think, for a lot of traders and investors, especially at the time, considering the exuberant price action we saw, the very greedy sentiment we felt when we first passed $60,000, to then retrace over 50% and reclaim a new all-time high at $69,000. I think just many didn't expect it. It was a double peak cycle, and I think once we actually reclaimed and made a new all-time high above that $64,000 previous all-time high, many were potentially expecting considerably higher prices, maybe a new all-time high at $100,000 or something. But this second peak came only a few percentage higher than the previous all-time high we'd set just a few months earlier. So like I said, it caught a lot of traders and investors off guard. I think many, like we said, were expecting a double peak, somewhat similar to what we saw in 2013, 2014, with the retracement before a considerably higher all-time high just a few months later, not just a few percent. So why did we have such a peculiar price action all-time high? If we just look at the MV/RV score, this really solidifies the fact that a lot of metrics really pointed towards this first $64,000-ish price to be Bitcoin's all-time high. It's when the market was really overheated by pretty much every data point we can see. We can see by the MV/RV score, we actually came into this red sell zone at, like we said, around $60,000 before retracing. And once we actually made this next all-time high, the MV/RV score had come significantly lower. If we look at something like the Pi cycle top indicator, which has historically called the timing of the Bitcoin bull market peak within just a few days, we can see here that once again, this called the almost exact price peak of this price action move we saw here at around $64,000, $63,000. And by the time we hit a new all-time high at $69,000, there was quite a bit of separation between these two averages. Again, somewhat unsimilar to the other double peak cycle we had, where the Pi cycle top actually crossed twice to signify both cycle peaks. Something like the realized cap hodl waves as well. A lot of retail interest came in to buy at this cycle peak here. And then by the time, again, we hit the new all-time high, it seemed that most retail interest, most new capital coming into the space had really subsided, and there wasn't really much expectations of this new all-time high being made. Or like we said, at the very least, there were expectations that once we'd made a new all-time high, that it would be significantly higher than the 64K peak. So if all the metrics were pointing towards 64K being the cycle peak for BTC, why was 69K the cycle peak? Why did we create this double top in price action? Well, I think a lot of it has to do with the sentiment at the time. Like we said, people were feeling very greedy when we first reached the 64K level. But if we look at something like the traditional market cycles, the high yield credit cycles, we could see here that sentiment was still incredibly high, incredibly greedy, people trying to squeeze out every last bit of profit they possibly could. And this really dragged Bitcoin higher, I feel. We could see here that even as we topped out at 64K, traditional markets did not feel this potentially topping price action. They were trying to drag prices even higher. If we just look at the Bitcoin correlation or year of change to the S&P 500, we can see here that Bitcoin, once it actually first made its peak at $64,000 and started to retrace a little bit, the S&P 500 was still seeing quite substantial year-on-year growth. And here may be the clearest sign we could see. As Bitcoin peaked at $64,000, saw its retracement, the S&P 500 was still climbing significantly higher. And as we can see by this green line here, which is the Bitcoin to S&P 500 correlation, this correlation continued to increase as Bitcoin was just following the lead of traditional markets. If we look at something like the treasury yields as well, we can see here, this is the treasury yields of bonds by expiration date. So on here, I've just got the 1 month to 1 year treasury yields. We could see here that these were still yielding close to 0%. No one wanted to put their capital into safer investments such as bonds. No one was happy with low yields. People were trying to catch exponential upside gains. And this was just fueling prices considerably higher in spite of fundamental factors, on-chain metrics, if there's nowhere better to put your capital, if everyone still thinks that prices are destined to go considerably higher, then people aren't going to withdraw their cash and be sidelined while seeing those prices continuing to increase. And a lot of this is just due to the amount of liquidity that was in the system at that time. Following the COVID 2020 pandemic and the stimulus relief and the lockdowns, etc., we saw the amount of actual cash or cash equivalents in the system increase exponentially, as outlined here by this US M2 money supply. And even after Bitcoin hit this first all-time high and retrace, this was just continuing to increase rapidly. And then when we hit the $69,000 peak for Bitcoin, this is when the US M2 money supply actually started to round off a little bit. We could see values begin to decrease before a little bit of a contraction in the US economy, which is also when the S&P 500 topped out and began to see a little bit of drawdown. So it's really important when we're conducting our analysis, when we're trying to time our investments, that we try and take into account multiple metrics and we look for confluence when multiple things are telling us the same thing at the same time. So even though we saw Bitcoin's price action topping out, we could see that the fundamentals and the global wider market was still very greedy. There was still lots of liquidity being pumped into the system, which likely led to considerably higher prices in lots of assets. But then if we look to Bitcoin, even though a lot of the metrics were potentially showing that the peak was $64,000, there was still lots of signs, especially as we reached that $69,000 level, that again, we were likely to have a little bit of resistance at that point. So if we look at something like the golden ratio multiplier, again, as we reach this first all-time high and we hit this 3 upper line, as we retraced, found some support on the 350-day moving average, this second all-time high we set was right on this 1.6 accumulation high. So just because this wasn't the actual highest line on the chart doesn't mean that this isn't going to be fairly significant resistance, which actually proved to be the topping price action for Bitcoin. We can look throughout all of Bitcoin's price history, and pretty much every single one of these lines has had a huge amount of significance in each single one of Bitcoin's cycles. So even though people may have been expecting Bitcoin to come back up to this purple line once more, every time we reach one of these lines, it's worth looking at a few other metrics for confluence to maybe see how things are looking. Because if we're seeing Bitcoin at a major resistance level, the actual rate of liquidity coming to the system substantially slowing down, and then another metric like the Bitcoin Crosby ratio also showing that the Bitcoin's price action has increased very exponentially, we're likely in overheated market conditions and could expect a little bit of a pullback. All of these in confluence maybe gave us another indication that this was probably a little bit of topping price action. Now, no one could have predicted that $69,000 was the exact price peak. And for those that were following the more traditional metrics that maybe took a lot of profit at $64,000, I don't think they'd have minded too much on a couple of percent missed opportunity. But ultimately, what we need to do is be more reactive in the market. We can't look to one metric, one tool to predict the exact outcome of an asset's price 2, 3, 4 years into the future. While these give us great levels to watch, we really need to take into account multiple levels of information, the broader market economy, Bitcoin on-chain and fundamentals, and then market cycle data to get the full picture for our investing. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, most metrics pointed towards the $64,000 peak being the real cycle top for Bitcoin, with the double top price action catching many investors off guard. And this is why we need to look at other metrics, such as treasury yields and high yield credit, that indicated that investor sentiment was still incredibly greedy in the wider markets. And the correlation of Bitcoin to the US markets, especially the S&P 500, was likely the most influencing factor in dragging the Bitcoin price to that $69,000 all-time high. This is why we need to look at other metrics such as the golden ratio multiplier and the Crosby ratio, which provided confluence of potentially topping prices, that even though we may not have expected $69,000 to be the new next all-time high, they provided enough confluence to at least suggest that a pullback was imminent. So really, we need to be reactive, look for confluence throughout the entire market, throughout as many metrics as possible, observe fundamentals like we saw with the COVID 2020 pandemic, which was quite a black swan event that led to really new market conditions that no one could have really anticipated with the stimulus and lockdowns, etc. And really ultimately just prepare for all outcomes, because as much as we can look to charts to try and gain as much help as possible, the best way you can be a long-term success within investing is to just prepare for all outcomes, manage your risk appropriately, and stick to the plan. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on Bitcoin trading and investing for the coming weeks, months, and years. Where do you think the next price action peak could be, and what metrics are you watching to try and help you determine when to start taking profits in your positions? As I said, let me know. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.